Dun dun dun! This is going to be an important daily cryptocurrency market update video. Welcome back, everybody. We are going to not waste any time and really get into the big news that came out yesterday, which was the UN calling for a reversal or at least a halt in interest rate increases across the board, not just from the Fed, but central banks generally. You know, there is a huge knock-on effect, and I will draw a graph again. Remember, we will get into this concept of liquidity. It's something that we continue to impress on you guys because liquidity is the driver of markets. It's why we aren't investors here, because that tap is not turned on. And in actual fact, liquidity is getting diverted into a failing debt system. So we're going to really kick things off by looking at what the UN has essentially said. We must change our course. Is this the pivot that we've been looking for potentially? And did we see the start of that with the Bank of England? I don't believe we did. Bitcoin is back at 20K, and I do think we are going to see probably a little bit of further continuation to the upside here. Given what's sort of taking place, we will do some technicals and some TA and some cross-market analysis. You know, we can see that the futures market is up massively. It's doing very well. The UK market is up, and the dollar is down, and gold is also up. Gold and silver have been having some really good moves. And of course, you know, on balance of probabilities, Bitcoin is likely going to stay in sync and correlated with them and also move up. You've got to be doing cross-chain analysis if you are a day trader and if you are also a crypto investor, because we live in this, again, markets are just driven from liquidity. It's a bad, one reason we've been out of markets is because we understand what interest rate hikes do and a lack of stimulus to the economy. We live in a very much crack addict like society or economy, I should say, not society, although that's debatable. And essentially, they are no longer having their fix. The economy is no longer having its fix of stimulus and is having bad withdrawals from it. Also, interest rate hikes after we've seen this kind of era of free money potentially come to an end. We will be doing some looking at some on-chain data, some interesting on-chain data, and a couple of other things. Also looking at, this was an interesting article, Mortgage Mayhem sparks fears of a housing market crash in Britain. So one reason that we've also stayed out of markets is because inflation is killing the consumer, and so is interest rate hikes through debt. And we have pretty much record numbers of debt. And this is, you know, everyone's levered up given the free sort of money that we've seen, and now that's been taken away, and actually it's become very expensive to hold that. So let's start with this. This is from the Wall Street Journal. UN calls on Fed, other central banks to halt interest rate increases. Is this the start of the pivot? We must change our course. The UN warns that the world is on the brink of recession. What gave them that idea? Monetary and fiscal policies in advanced economies, including continued interest rate hikes, could push the world towards a global recession and stagnation. The UN Conference on Trade and Development, UNCTAD, said on Monday. So this was yesterday. A global slowdown could potentially inflict worse damage than the financial crisis in 2008. We've been calling for a 2008 period. It's why we're not in markets. And the something 19 shock in 2020 warned the UNCTAD in its Trade and Development Report 2022. We still have time to step back from the edge of a recession. Nothing is inevitable. We must change course, said the UNCTAD Secretary General Rebecca whatever said. So the problem with a debt-based system is it has to be ever inflationary. So money, when money is printed, there's a liability and an asset. The asset being money, the liability being the debt behind it that's allowed it to come into existence. So there's always a promise to pay back. The problem is when you start up in interest rates, you need more of that money to pay things back. So it's inflationary as a model. And if we think about, and let's just pull up, and I'll do a little draw here. If we bring up the M1 money supply, you know, this is liquidity essentially, the money supply. Huge increase. We show you this consistently. Now, if you think about, you know, the flow of liquidity, so it's going straight line, you have assets here. When we talk about liquidity being drained, what we're really talking about is interest rate hikes. Because instead of there being this real money's free, it's very cheap stream of money, you end up with quite a lot of that liquidity being diverted into debt. And not only does it come from the sort of already stream of liquidity, it goes out of assets into the debt markets. So liquidity gets drained. And this is because we see an increase in interest rates. Whereas previously we've been up next to nothing. So where have you parked your money? Well, if you're inflating the money supply, if you have no interest on that money and it's worth less as a result of that, you're going to dump it into something that's going up relative to it. Remember that markets essentially, and this is what we mean by draining liquidity. It's not the Fed are not coming up. Well, they are sort of maybe metaphorically, but they're not physically going around vacuuming all the money up and taking it from the stock market. They're doing it indirectly through interest rate hikes, making debt harder to service. And you've got to remember the real thing for Bitcoin, and this is why we're going to look at a little bit of on-chain, is the money supply has really just gone up since 2008. The Fed's had you back. We're now at a very different period. And what's been very apparent to us, really since Bitcoin was at 44K and since the stock market, or certainly the NASDAQ composite was at around about 12,700 or 12,800, is that things are going to get worse as a result of a continuation of liquidity being drained from the system. This is what the UN's calling for. It's not just liquidity it is really liquidity to service debt going up massively. You're going to need more and more dollars, and this is set to actually continue, which is the kind of the reason that we're not investors across the board. We had played a clip, and I'm going to play it again just to kind of let people know how serious this situation is. We are going to have millions of people sitting on a mortgage ticking time bomb. This came out today. We played this clip yesterday. Mortgage mayhem sparks fears of a housing market crash. So very simply, if people have to choose between staying in their homes and holding onto their Bitcoin, and one argument I always get is, well, who's going to sell at these levels? We've not seen, I don't think, real capitulation yet. We may have seen it somewhat in crypto, but we haven't seen it in other markets. We haven't seen this kind of, where are we? 2008, let's find it. This kind of price action. I think that's coming. This next kind of rollover. I think that's very much coming. Could that be Credit Suisse? Could that be, who knows what the catalyst is? There will be a catalyst, there always is. But in actual fact, just like in 2008, that kind of a system was always sort of somewhat destined to fail. So I'll play this clip again for you very quickly, and then we will move on to a little bit of on-chain. But this is very interesting because if the Fed stopped doing interest rate hikes, I think markets would do well off the back end of this. But the problem is, I think it would be short-lived. If they start bringing them back down, sure, we're buyers. And if we even preempt that, and how are we going to preempt that, guys? So this has came out. Markets are rallying off the back end of it. Let's take a look at the Fed funds, the futures. We haven't seen this shoot back up. And this is because the Fed hasn't actually said that they're going to do anything. We're using this as a metric or maybe perhaps a guide of when we should get into markets. This starts ticking back up, we'll potentially look at buying. At the end of the day, I'm not massively fussed either way in the direction for crypto. I'd happen to bias that we're going to see further downside. I think 15K is going to get ran. However, if we get the right signals to pivot, then in terms of our position, then we will do so. Also, you've got the Eurodollars futures. Now, this is ticking up slightly. Of course, there's a correlation there with Bitcoin, but we will see, how this goes. So we've not seen a pivot really show up technically, but we've got a number of interesting things. We've got the non-farm payroll on Friday. Of course, jobs has a huge, or the number of jobs has a huge play on fiscal policy from the Fed's point of view. But the fact that the UN is essentially saying we've got to stop this. Why? Well, we've told you why, because it's going to cause mayhem. Let's listen to this clip again. I thought this was a really good clip, and then we'll move on to a little bit of on-chain, a little bit of technicals, and leave it there.
Interest only and increasing on a monthly basis. It's almost doubled since January, and I'm struggling to make my contractual payments as well as other outgoings. My mortgage is joint with my husband, and I can't get a mortgage on my own to cover the balance owing to paying my ex-husband any equity he is due. What can I do?
I don't know. I mean, I just... The situation now is bad. And if those interest rates go up, as have been discussed, and it is not certain that they will, but that is what the markets are predicting.
He's hoping.
Then, I mean, we are going to have millions of people in that, and we are sitting on a mortgage ticking time bomb.
Are they really going to be holding their Bitcoin rather than making their mortgage payments or putting food on the table? I would argue not. Now, that's if we go into that environment. Remember, there still is a saving grace. And if you look at global debt is going to implode if we continue to follow this path. Liquidity crunch on the way. This is the refinancing cost of borrowers globally climbs to a record. People just simply can't afford the debt. You know, we've been given that drug and we've all been enjoying it and you know, getting high. And now all of a sudden they've made us go cold turkey and we're suffering with the symptoms of that. This was a little bit of interesting, you know, on-chain is all these idiots that try and predict what the price is going to do based on on-chain metrics. It only works in a bull market, right? It doesn't work in a bear market. We've seen it's why we've seen the likes of Plan B. His model went out the window, and that's because macro took over. We stopped moving off our own fundamentals and started dancing to the tune of the sort of fiscal policy monster that is there to create volatility and not dilute it. Who do you think is going to be there to scoop up all the houses, all the assets when the bottom is in and when everyone's been a forced seller? It's going to be your big companies, your big institutions, and it's going to be the elite. And that is no conspiracy. It happens time and time again. Every time these boom and busts happen, the table and all the chips get tipped into their pockets. It's how this works, ladies and gentlemen. It's all about impoverishing the masses. And we are going to say it regardless of whether we get a strike against us, because it's what I believe. And one reason we think financial education is so important is because it directly impacts your life every single day. People have got no idea. I do, because I have some sort of trade with the US, or I do trade where I have to take pounds and put them into dollars. We've also been sat in US stablecoins because we predicted that the dollar was going to be extremely strong. But people have got no idea. They've almost lost 30 or 20% of their value against the dollar. This directly impoverishes you and stacks the chips in the sort of active investors' sort of favor. So, breaking new all-time high, 61.9% of BTC has not moved in over a year. Name another asset where holders refuse to sell after... Yeah, I don't know what he's getting at there. Kind of maybe highlights the belief in it, but also potentially the lack of education in regards to investing and how it works. But this is interesting. I wonder, and when we're talking about who the next wave of sellers maybe are, potentially it's these guys. And actually, I would actually argue that there's probably quite a concentrated supply and only a small amount of wallets. But I think you will see this decline in this recessionary environment. I really do think that will be the case. And then we'll kind of see a steady decline. Some good news is the hash rate is going bonkers, up 72.7% year to date. Now, this is impressive because Bitcoin's hash rate, meaning the energy that's used to sort of mine Bitcoin, essentially is doing very well, despite rising or uncontrollable and just insane energy prices, which is shocking. I thought that we would see a real minor capitulation. We have seen somewhat minor capitulation, but the slack has been picked up elsewhere. And certainly the thing is with the hash rate is the more advanced technology gets to mine Bitcoin, these sort of Bitcoin miners, the more hash rate is going to be put out, and the more kind of computers that we have for that hash rate. This is just an interesting article. Energy giants return to fossil fuels like coal as Europe braces for winter. They have no other choice. We saw the Nord Stream 2. I think they're labeling it an attack, but my guess would be that it didn't come from who everybody's pointing the finger at, that it was somewhat a bit of an inside job. I mean, why would the man destroy his only, or one of his only, he's got a few, leverages against Europe, you know? I'm not sure he would do that to himself. So that begs the question. But anyway, we're getting a little bit off track here. Let's take a little look at Bitcoin. We took the long yesterday. I will post some trades that I do. We took a really nice long on MATIC. We didn't stay all the way in to get filled, but we were spot on with the thought process. I can show you that. The reason that I'm showing you this, and this was the call that I gave to my patrons, the reason that I'm showing you this is not to brag. It's just that we actually don't really care which way the markets go on a trading perspective. From an investment thesis, you guys know that we're not getting in. But trading wise, we'll take either scenario, whether it be long or short. It just really depends on the risk to reward and what's given. But if you look here, you know, we've said we've got this head and shoulders. Many people are now calling for it. I've seen lots of targets at 13,800. I wonder where they're getting that from. Just happens to be the head and shoulders target. I would probably bias a little bit more upside here, certainly with this sort of UN news floating around. You know, if you look at FTSE, it's up. If you look at the dollar, it's down. If you look at a yield curve, it's starting to come up. Some of the markets, the Nifty 50 is up. For the Asian markets, we've got the futures that are doing very, very well. We've got gold that's up, but slightly. Is this a warning sign? Maybe. Gold and silver have seen fantastic moves. But I still think that that next leg lower is imminent. Does that mean that we can get a rally up to maybe 21, 22, 23? We've always said potentially you are going to get a double peak right shoulder before we see that continuation to the downside. One thing that I want to note as well that I've zealously been speaking about to you guys is this. It's not going to be long before we put in that next down leg, even if we do something like that. And in fact, it's always common that you have one kind of last hurrah before you see that downside. We're doing the same thing that we've done really all the way down from 69k. And until we have reason to pivot and say, okay, this is no longer a downtrend, and the trend is, you know, the trend is your friend, then we continue with a bias that we see further downside for the crypto markets. Just from a technical perspective, then if you factor in the macro, the kind of fundamental aspect, it paints a pretty clear picture in my humble opinion. That is all I've got for you in this video, guys. If you have enjoyed this content, a like is always appreciated. So is a comment. Please share, subscribe, you know, try and get this content out to people. It's real, honest content, which you don't get a lot of on YouTube. All I've got for you in this one. See you in the next one. Have a wonderful Tuesday, guys.